All right, it's debate time. So we are going to be having a nice little debate on stage here. How blockchain and ICOs are changing the funding game for startups. Is traditional VC dead? We're going to find out. So let's bring in our moderator, Andrew McCreath, who is the CEO and CIO of Forge Asset Management and a BNN TV host, and he will introduce the rest of the panel. Enjoy.
Good morning. Okay, we have 30 minutes. Should have a microphone here if you wish to use it. My name is Andrew McCreath. It's a pleasure to be here today. Welcome to our panel session, how blockchain and ICOs are changing the funding game for startups, with a bit of a bracket about whether it's going to challenge traditional venture capital. Allow me to introduce our panelists. So, Georgia Quinn, who just picked up her microphone. She's joined us from New York. She is the general counsel at CoinList, an ICO platform and compliance technology service provider. At the far end, we have Mike Woollatt. He is a successful entrepreneur, and currently he is the Chief Executive Officer of the Canadian Venture Capital Association and the CEO of the Private Equity Association of Canada. We also have Kevin Hobbs. He is second from the far right. He joins us from Vancouver, where he is Chief Executive of the Vanbex Group, a shop that's been around for the better part of 10 years, and they are a strategy and implementation consultant to the blockchain space. And lastly, but certainly not least, we have the founder of TokenFunder to my direct right here, Alan Wunsche. So thanks for joining us. Let's hope that this is active, and we will start off by me asking the title question to Alan on whether or not crowdsourced ICO funding should be seen as a complement or as a competitor to traditional venture capital funding.
Thank you, everyone, for joining us here. Maybe before I answer that question, could I have an audience show of hands, please, as to who has actually participated in an ICO in the last year? Okay, we've got a fair, good number of hands. ICOs, initial coin offerings, essentially a crowdfunding mechanism where if you have a cryptocurrency, you can send your cryptocurrency literally through the blockchain to a project, and we think of it as peer-to-peer investing, such that you don't have to go through middleman, you go through the blockchain to interact directly with the project. So we definitely in 2017 have all indications that this coin offering, and I think the other word is token offerings, token being the more generic term. The token offerings are certainly an indication that we are seeing a transformation of venture capital.
But are they a complement or a competitor?
They are both, and I'll tell you why. So in many cases where you individually have now participated in a particular project, you've certainly complemented what could have come from a venture capital, and you could have competed. Now the question around the is it either or? It's a competitor when the company itself decides not to go to Silicon Valley, but rather open up their project, such as we did at TokenFunder, and open it up to investors at retail and accredited levels, and didn't go to venture capital directly. So in a sense, we chose to say, Instead of venture capital, we would open it up and allow for a democratized peer-to-peer investment model where you can purchase our tokens. Now, I would say that it's complementary when we see the additional added value that venture capitalists do provide today. So,
right, and so I wanted to ask Mike about that. You know, you hear the word competition, but it strikes me that VCs bring a fair bit of expertise and knowledge to the table.
Yeah, I think I wouldn't classify them as competing. It's a very different way of raising funds. And Alan, you were just mentioning, you know, if you look at it, if you look at VC as just pure capital, then yes, I guess it is somewhat competitive. But you know, from my standpoint, if it's actually, you know, and I see in the brackets, is traditional venture capital dead? So I should probably answer that part too. It's up there too, yeah. You know, VC has been growing for 10 straight years around the world. It's now roughly 200 billion a year transacted, sitting on record amounts of dry powder. The ICO market, I'm actually not sure. It was 2017 was like 4 billion or so and growing, I think. 5, 6, okay. So, you know, it's certainly not replacing VC. You know, what VC brings to the table is money, yes. Doesn't suit every company. But, you know, if it's a very fast scaling company that needs connections, needs expertise. Many VCs have entrepreneurs in training that have done very similar companies before. You know, all the pros, if you will, that you see on all the Google sites, and when you look around of VC, the extra that they bring. So I wouldn't put it in the competitive landscape except for the dollar figure or the coin
Kevin,
figure.
are there certain types of businesses that require a simpler structure of an ICO as opposed to a VC investor, or the stage of a business?
I think my fellow panelists can probably answer that better, but I would say the answer is yes. I think there are certain businesses that very much need venture capital and do very well by VC. We all know them. You just look at your phone and half the app's on there. But you know, there's obviously many that suit an ICO, I think.
Georgia?
Yeah, so first, I would hardly call an ICO structure a more simple structure than VC, just fundamentally the lines on the cap table. But I would like to really, you know, point out that this is at least at CoinList, we really view this as a completely complementary structure. And what's great about what these guys are saying and all of the insight and expertise that VC brings to the table, now for the first time, we really can allow more Main Street type investors to invest alongside and hitch their wagons to that expertise. And so it really is a nice complement in the sense that, you know, you're allowing people that otherwise wouldn't really have had access to this asset class or type of investments to now participate, but along with the smart money, as people say. And from a regulatory standpoint, I think it goes a long way to show that these are quality deals that have valid investors kind of putting a stamp of approval on them before you allow a more retail type investor to join in.
Kevin, is there a type of business that is not suited for an ICO?
Yeah, there's many types of businesses that aren't suited for ICOs. We see about 250 plus companies a month that come to us, and there's probably about 4 that are suited for an ICO. And I would kind of say that ICOs are complementary, but they are changing traditional VC capital in a massive way. I mean, one of the things is non-dilutive capital that we're seeing. That's also going to change, which a VC model takes a lot of capital from a company, and a lot of times in 2 years you don't even own your company, which is much different from the blockchain space and how ICOs work. When you're looking at an ICO, you need to be able to attach the token to a company's business model in some way. And if you take the funding out of a token, what a token really is just a vehicle of information. And you can attach almost anything to that vehicle, not just a currency. So you can attach different types of information, which it is an asset class, and you can attach equity to it, or you can attach identity or anything like that. And soon I think we're going to see a shift in tokens, not just for fundraising, but for different vehicles that people can use within their business.
So there seems to be general consensus that it's a complement as opposed to a competitor to traditional venture capital for several different reasons, as you've heard from our panelists. I'd like to shift things along now, and yes, I saw Fred's slide with respect to the internet and blockchain. If he'll allow me, I will simply look at blockchain as being somewhat analogous, as opposed to analogous, to the internet 20 years ago as it being a platform, an enabler for which creative individuals generated, a tremendous number of very useful applications. So the utility of blockchain for fundraising is obvious. But when it comes to ICOs, I'd like to ask our panelists about ICOs versus blockchain, because there's a side of me that thinks that other than for speculation, why does each ICO need to be a separate coin, a new coin? I'm wondering whether it defeats the purpose of the original intent of using blockchain as a permanent, trusted, and efficient intermediary for fundraising. Georgia?
Sure. So I don't really see the dichotomy here as like token versus blockchain, because the blockchain is an intricate part of the token that's being issued. The reason for a distinct token is because there is a distinct network and a distinct use for that token within whatever it is that the company is developing. So I think it's also important that we are very clear, and other speakers have mentioned this already today, that we distinguish between Bitcoin and other cryptocurrencies and blockchain technology. So if you want to invest in Bitcoin or Ether or any other cryptocurrency, that's a completely separate discussion than if you want to invest in a project that a company is developing that utilizes blockchain technology, and the way you choose to invest rather than a traditional equity investment is something that has a greater utility within the network that the company is developing. That's an ICO. So really, I don't think the distinction between a token and blockchain is a real argument.
But with 46% of 17 ICO offerings having failed, aren't there a multitude of tokens that are already out there that could be used as a financing vehicle without needing to have that element of speculative nature built into them being a new coin offering?
Oh, far more than, what did you say, 46?
That's the latest statistic that I've read.
Far more than 46% of all the ICOs out there are calling something a token that is actually just a security and a traditional form of financing, and doing so illegally. So that is really not even a concern. What we're talking about, I think, when we really truly mean an ICO, is something that is using blockchain in a fundamental way to create an infrastructure or a network within a company that creates, again, some form of utility, something that serves a greater purpose than simply financing the company, but provides users to experience the network or other knowledge sharing or mining activities.
Andrew, maybe I can help. But what I think you're trying to ask is, could someone raise funds with a Bitcoin or Ether instead of creating their own token? And that goes back to, say, something like traditional funding. You invest in a company, you get a share certificate, so you actually own something. If you raise money, and right now you are raising money with most tokens in Bitcoin or Ether, but you're getting something for that money, you're getting that token. So you need to create that token, and it could be a share certificate or something like that. But without using a token in a blockchain investment, you'd have to go back to something traditional, like a share certificate, so they own something. And if you're gonna do that, why use blockchain in the first place? If your token doesn't have an inherent value into your network, like a utility, then it is a security or a payment. And Switzerland spoke on this just recently about this. So what George is saying, the technology provides utility, but a token is a vehicle of information. What we attach to it can be equity in a company.
What about the regulatory side of ICOs? Some platforms are only open to accredited investors. Other platforms, you do not need to be an accredited investor. Of course, many ICOs are raised offshore in countries that are beyond the purview of regulators, Barbados, Switzerland. When I go back and look at quotes in preparing for our time together today, I read a quote from Reagan, President Ronald Reagan from 1986, where he said, "If it moves, tax it. If it keeps moving, regulate it. And if it stops moving, subsidize it." Clearly, the SEC is looking hard at this space right now. They do have the Howey test, which has two measures so as to determine whether or not it is a security or not, but clearly there's a lot of gray area if you read the testimony from the chair of the SEC and the chair of the CFTC at hearings a couple of weeks ago. It strikes me that venture capitalists bring in an air of credibility to a fundraise, whereas the ICOs seem to be a little bit of a Wild West. And I suspect that some of the panelists will agree or disagree more likely to that statement. But it strikes me that ICOs may be shooting themselves in the foot by not getting their collective regulatory act together. Georgia?
Oh, okay, sorry, I'm like totally monopolizing this, but what you're saying is absolutely true. So in just the past week, we've seen a rash of 80 or more subpoenas issued by the SEC. Several enforcement actions have already taken place. I mean, this crackdown is happening. And I mean, it is to the detriment of the ICO market in the short term, but in the end, this is going to be like a trial by fire and a cleansing process. And those that are compliant and those that take regulation seriously will develop an industry that is, you know, working hand in hand with regulators and producing a product that is ultimately compliant.
So I'll add a little to that. So we had worked with the regulators here in Ontario for an entire year to get something that would work in Canada, and it's definitely the Wild West. First of all, I totally agree with that. Outside of the regulated, if you will, let's just call it North American regulatory environment, because you could take any one of us. Let's just do this. If I went offshore and I have my ICO running, and every one of you participated in my ICO, and I had no idea anything about you, how do I know that it's a suitable investment for you at the end of the day? I actually don't. So I have no idea where your money's coming from or where the money's coming from. And this is essentially kind of the business risk that these ICOs have taken by desiring or choosing not to work in a regulated environment, because they basically said we don't really look to where the money's coming from. We just want the money. So essentially, that's how the Wild West has come to bear, and we can do better. We can do better when you see an ICO that says terms, includes terms such as you are a donor to this fundraiser. Look at the Tezos terms and conditions last year. I mean, this was one of the biggest ones. You had no rights whatsoever. You deserve better as an investor. If you're looking to participate in an ICO or a round like that gives you zero rights, it places all the risk on you, you're absolutely speculating. You are not investing. So we can do better. We can do better, and we are doing better. There's an approach that we can bring KYC, AML, into this equation, and that's what we're doing as a company that chooses to build in Canada, by the way, so that you can have a safer environment. Because ironically, as the blockchain is supposed to engender trust, in many of these ICOs, it's difficult to frankly trust where that funding is going, because it's frankly very murky as to who's doing insider trades on these new coins and tokens and who has the majority interest. You just have no idea. That's why in an unregulated space, it actually is the Wild West today. And when we start to bring in real honest principles for investors, it'll be much safer. And at least we're trying to help the process along here, and I think hopefully many more companies that are working in Canada and the U.S. are going to take this approach, because we saw it happen. We believe as well, like Georgia was saying, there's too many coins out there masquerading as non-security that will be security related very soon.
I find all this quite ironic, because venture capital in Canada is relatively young. It's about 20-odd years old. There are funds before that, before it got substantial, and the TSX folks in the room will say, they were getting the questions of, are we replacing IPOs? And crap, it's a wild, wild west out there with the VCs. They just are investing, and there's no, and the regulatory requirement is not, it's so familiar to me, this tick over here, and eventually VC got more and more regulated. It's still not, definitely not as regulated as the public market in terms of reporting requirements, things like that, but obviously accredited investors are important. A couple of things that I just point out on the ICOs that would do themselves a lot of favors, I think, and Vitalik and others have been talking about this, but you know, there's a couple of non-starters for VCs when they look at ICOs, and one of the big one is the inability with some of them to ensure that the founders maintain a significant portion of the company going forward. And contrary to what Kevin said, what VCs do want their founders to own usually the majority of the company. Venture capital by definition is just taking a minority in a position, in a company. You want that because obviously incentives are aligned. Somebody enriching themselves and not doing anything with the company is the exact opposite. And then you get into messes with cap tables and things like that that people have already chatted about. But I do find it ironic. I feel like we had this discussion in mid-90s. We're still having it now, frankly, because the TSX is sick of hearing from VCs that, hey, or from companies, hey, why would I IPO when I could just, there's so much dry powder out there in the private capital markets. Why don't I just raise over there? There's so much, I don't have to report quarterly and all that other stuff. You do have to report quarterly, but it's not the onerous requirements on the TSX. The same happened with the crowdfunding vehicles that pursued, a lot of them are in the room now, or Front Funders, a sponsor of this, that are pursuing regulatory for that very reason. It's the validity that comes with it. And I think the Canadian government, the previous speaker talked about that, but the government needs to get behind this, figure out the regulatory path forward, and it'll lend a lot of credibility, and then we'll really be able to figure out where the spaces are where ICOs make more sense. This is my opinion, where ICOs make more sense, where VC makes more sense, where an IPO makes more sense, all the way up or down in terms of the TSX Ventures,
Do any of you have any advice to regulators with respect to the structuring of ICOs and or how they're offered?
So I've been working with the regulators in multiple countries for the good better part of 2 years. And one thing about blockchain is it's a change agent. And as much as I don't agree with Ronald Reagan's statement, he was making those statements prior to the internet even built, with regulation that was built before we even had this digital technology. And what we need to do is change our technology to speak to the world that we live in today. And that's kind of what we're trying to do in Canada. We're trying to rewrite the Pacific Coin Test to help a better understanding of who can invest. So right now, one of the things that investing in blockchain, and we're talking about VCs and things like that, most VCs don't have a clue about blockchain or anything like that. Most investors, accredited investors, don't have a clue about blockchain. But there's guys on Reddit or Bitcoin Talk that know way more than most people in this room and can vet a project for its technical abilities to succeed in this space. But guess what? They don't got $1 million in the bank. They don't have enough money. They can't be accredited. And right now, that's the only way you can be accredited. The other part of it is the jurisdictional risk. Our regulation are built in different jurisdictions. The internet allowed us to grow and be global. So why not allow a company to go out and raise money globally? The biggest failure point in most startup companies, and all blockchain companies are startup companies, is the lack of capital. They don't get enough money. ICOs have changed that. They allow a global investment group, which gives you evangelists, it gives you customers, it gives you people who are going to be talking about your product and using it all over the world. And that's something that other things that VCs don't do. They don't put you in front of the world like blockchain does. Our internet has given us social networks that we never had before. And we need regulation that speaks to our current environment, not to the one that was 40, 50 years ago before this existed.
Georgia?
Yeah,
Alan?
just a couple points on that. I agree 100% about having some form of, global regulatory regime for this, because this is truly a global technology and has far-reaching global, consequences. Good luck with that. So I think one, solution, which is a bit of a hack, but is to kind of patchwork amongst different regulators and different jurisdictions and look to the jurisdictions that have the expertise and have been working in this area and trying to develop and really try to form at least some kind of unified structure where you can at least, operate in 10 or 15 different jurisdictions and raise money or conduct your ICO and know that you'll be safe and you'll be operating compliantly. And then just to add on to that kind of list of things from a regulatory perspective that I think would be really helpful is some form of guidance as to a security token versus a utility token. Does a utility token even exist? Is it possible? It would be great to get some safe harbor or list of qualifications that a company can rely on when developing their technology and developing their instrument, be it a token, be it a utility token or a security token. And then just the final piece is the secondary market. And people just overlook this. They just assume that once these tokens are issued, they're going to be completely liquid on a global scale, and that's just not the case. To the extent they're a security token, there are regulations required. They have to be listed on a public exchange, or they have to be traded in an exempt offering, in an exempt transaction. And so people, they get so focused on the ICO moment where they're doing the initial offering that they don't realize that the real, elephant in the room is how are these investors going to have liquidity and trade their tokens, be they utility or securities.
So that's what about dispute mechanisms for the retail investor that invests in a token?
Sorry. So we do need to have dispute mechanisms. We do need to have retail protections if you're talking about a utility or a security token. We don't have that in place right now. There's none that I know of that there is a dispute regulation, except for actually in Switzerland. So Switzerland has come out with just recent guidance, and they do payment tokens, utility tokens, there are some in the world, and asset class tokens. And
not according to the SEC.
But this is why we need change. And this is the whole reason why we need, according to the SEC, Beanie Babies could be a security. Same with baseball cards, same with cars, pre-sale condos, and we can go on and on about this. I might sell you my suit, and that might be a security. So these are the things that we need to change. And blockchain is not here to fit in our current systems. The same with the financial industry. It's going to completely change that, and for very good reason. But we do need to protect investors, but we also need to allow more people in. Having a different accreditation will have different dispute mechanisms, and it'll also help close the gap between the very rich accredited investors and the guy on the street who should have the same opportunities because he's so invested mentally in a project, and he can't do it if we are still under our same laws. So,
yeah, right now the dispute mechanisms that exist are plaintiffs' attorneys filing class action lawsuits, the SEC having enforcement actions, and then whatever contractual rights you may have gotten in your offering. And so to the extent you were, a retail investor, it's probably not much.
Well, I think so there are a couple of thoughts to kind of wrap up. First of all, I think I want to echo what Georgia said. The liquidity component of these security tokens is something that we need to see some more experimentation and/or expansion around. Because the currently security tokens have some limitations, and we need to expand that. We need to see some more around this, and we clearly have essentially monopolies in our trading markets today, and I think going forward we won't need those monopolies as long as token issuers such as ours, and you won't see TokenFunder's token actually listed on a traded exchange right away because we don't intend to be listed on a traditional exchange. We'll be listed in a different way and tradable in a new form and fashion. Because we believe that we can expand this liquidity of tokens in the future, and so we need to see the regulators actually expand marketplaces and expand this liquidity for security tokens when we see much more of them going forward. We do have dispute mechanisms already, so if anyone disputes anything that happens with respect to TokenFunder, we actually have to report it to the OSC. So there's specific guidelines around that, being a regulated entity, and so therefore investors can rely on the fact that there's actual accountability and oversight of the operations, in our case anyway, because there's all kinds of ICOs that don't have that kind of oversight today. And finally, I think as we back to the what can we do in terms of the kind of the regulatory environment. I certainly believe that we should have, we need to see more experimentation and some relaxation of all the strictness around it. We have, I mean, we've been given specific exemptions because we push for exemptions. We want to innovate, but there's a real tension between, you know, innovation and regulation, and we're seeing some good, you know, good news coming out of the OSC, and the OSC sponsored us to the Canadian level, and that allows us to go international. So the indications are trending in the right direction. We want to see more of that.
May I just ask one last question so that I can finish up our panel session on time? And if I could quickly ask each and every one of you, what happens after the current hype cycle in cryptocurrency ends? Will this cause a reversal in ICO funding? I think I know what the answers are going to be, but may I ask you, Mike, to start off with?
Yeah,
Just
I think it'll definitely slow down, but you know, I'm not the expert here. I think it would definitely slow down as the currency you know, comes off. I guess it's a heightened value, but at the same time, just because less people would jump in, at the same time, I'm really looking forward to talking about blockchain that isn't about these things, because there's so much more applications of blockchain, period, that are amazing.
So Mike, a slowdown. Yeah. We're just running out of time here, so a slowdown, but it'll continue. Yeah. Kevin?
Yeah, I mean, we're in tulip mania right now. It is going to kind of come down. We've already seen a slowdown at the beginning of this year in ICO funding. Things will slow down. We will get better educated. We will pick better projects, and a lot of the crappier projects are going to fall away.
So a slowdown. Georgia?
Yeah, so bit of a cliff as we go through this current regulatory environment. You know, as I mentioned, with these new enforcement actions, I think a lot of deals, at least a lot of deals that I'm aware of, have just pretty much been paused.
Yes.
But then pick up in a more thoughtful and cadenced and sustainable way.
And Alan, I'll just ask you, do you agree with what has been said?
I agree. We'll see a short-term slowdown and a flight to quality where we get investors demanding more disclosures and demanding more accountability.
Thank you very much. Mike, Kevin, Georgia, and Alan, thank you very much for sitting in on our panel today. Have a great conference.